Hi, I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree.
And I'm Jeff Weniger, head of equity strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets. Thank you, everyone, for, I suppose you could say, onto the YouTube page for Wisdom Tree, where we do these little 5-minute spots called Minds on the Markets. You can access, by the way, the written word for Minds on the Markets on wisdomtree.com/onthemarkets. And then you can sign up and get the email every couple of weeks when we write these up. It's a one-pager. And on this one, we had Kevin pretty much take the pen. He's working through the internals of GDP versus GDI, which I think is relevant for this transition of what I'm going to ask you here, Kevin. This transition where we, the market, we're hyper-focused on inflation. What does that mean for Fed policy? And now, call it since the last 60, 90 days, it's not so much what's happening with inflation, but what happens in the labor market. And you're picking through this, so what are you coming up with?
Yeah, I think that's the key takeaway here, especially following the jobs report that we got, which was certainly much better than consensus forecasts. And remember that statement, I'll be nice here. It's the economy, ... We'll just ... it at the ... And I think that's where the Fed's going, focusing more on the labor market than inflation. And you hear Powell oftentimes say it's the totality of the data. And that's what we're writing about for this week, is that we got, some upward revisions to growth numbers, income, savings. So the Fed is trying to determine what is the underlying trend, because unfortunately, Hurricane Helene and the effects there, the devastation, they're going to be skewing the next few months worth of economic reports. So it's really up to the numbers we get this month to determine where we are. And what's interesting is Powell even acknowledged that you had a revision of almost 2 percentage points to the upside to the savings rate, so that the outlook for future consumption now looks a heck of a lot better than it did just a few weeks ago at the September FOMC meeting. The jobs report I just mentioned, same thing, Jeff, is that, if we had that jobs report, and this is using Powell's language, he said back in September, if we had last month's jobs report, we probably would have cut rates in July. Well, now I'd like to ask Jay, okay, you got this monthly report. Would you have still gone 50 basis points in September? So I think that's what the Fed is wrestling with right now. What is the true underlying trend of the economy, of the labor markets?
And I'm going to ask you to give me a little bit more on Hurricane Helene, because the BLS had drawn a line through Hurricane Francine, which is kind of the forgotten hurricane before that. And you and I went through the data, and it looked like when we really started to see serious landfall was the 27th of September. So September was basically over. This thing's totally devastating. How's this going to skew, October, but also, I guess, Kevin, November data?
Yeah. It's a great question, Jeff. It's unfortunate. You don't want to, dismiss just because a hurricane hits one state and not others. And I think that's the big difference. Helene had a very large swath of territory of states that it went through and created that devastation. So that's why you have the potential, not just for the power of the storm, for its potential negative impact as well. So you're right. The negative impact could be for the next, say, couple of months. But then as money starts to flow into those states for the rebuilding, the reconstruction projects that need to take place, we've seen this before with natural disasters, that the negative becomes skewed towards the positive. And that's why it gets back to, well, what was the underlying trend prior to that? And the Fed's going to have a bit of a challenge to try to figure that out. But any changes that you could see in the numbers, you're probably going to have to go, just like we do with CPI, X food and energy, X shelter, whatever. It's almost as if the data we're going to try to extrapolate out, okay, if we don't have the hurricane, how did it look?
Make sure you're liking and subscribing. And then before we end it, Kevin, we got a November 7th Fed meeting. Where is street consensus and where are you?
It's fascinating to have seen how sentiment and the narrative has changed. If we were to have done this YouTube video a week ago, you would have had the battle between 25 or 50. Now you're seeing 25 or nothing. I think a quarter point, the Fed is going to go in November, and then we move on from there.
Okay, that'll do it for the Minds in the Markets video series here at Wisdom Tree. Thank you for liking and subscribing and for viewing it. Have a nice day.